What's up, fam? I'm going to show you guys how to put in call options on Webull. So let's say I would go to click a random app. Let's say I wanted to do one on AMC. I put a call option for AMC. I would open up the AMC tab, right? Now this is already assuming that you've already applied for your option trading ability on Webull. So I already did that, got approved for level 2 option trading, right? Now I'll go to my options. It would have all of these dates right here for the Fridays coming up, March 5th, the 12th, the 19th of March, the 26th of March, so on and so forth. So let's say I wanted to do an option for March 19th, and it would populate these strike prices. You can change the amount of strike prices that are visible with this number in the bottom right corner. So this number in the bottom right corner that says 30, right? So that means I'm showing 30 strike prices all the way from $2 all the way up to $20. And you can increase that or decrease that as necessary, right? So let's say I'm at AMC. AMC is currently sitting at $9.18 right now. What I would do is I would say, for this March 19th date, I believe that AMC would hit $10. So I would go ahead and click the $10 one. Let's say I believe in that, right? So it would show all these details right here. Your long call, you're buying a call because I believe the stock is going up. If you believe the stock is going down, you would place a put, right? Go from here, okay, buy. It says buy. If I click that tab, it would change to sell. Now it's buy, right? Go ahead and go to edit. Edit will pull me up the scale right here, showing all the delta factors, the theta factors, as well as the break-even price for this contract, how much profit I can make, and how much I can lose from this. Now, max profit is unlimited. That means that no matter how high it goes, it would keep factoring in whatever your data, your delta, your theta, as well as the gamma, and it would take into consideration all of that. And then your max loss, the max you could lose on this contract is your premium. So the reason, keep in mind that your max loss is negative 160 and your limit price is 160. Those will always coincide, right? Because look at your limit price. Your limit price for this contract is $1.60. So that means that per share, you will pay a premium, $1.60 per share, 100 shares, which adds up to $160 premium for this contract. And so what I would do is, it's on buy right now. You see everything that's going on. I would just, the order type says that it's a limit. You can also change that to market if you wanted to. The market's closed right now, so I won't do that. A stop price, and as well as a stop limit. Most of the time, I usually do market price if I want to get it really fast. Limit prices are good too. Buy a contract at whatever price. You don't have to watch it. Let's say it's at $9.18 currently for the stock. Maybe I would buy the contract when it drops to $9 flat. Saves you a little bit of money. So you put in that limit price. Limit premium is $1.60 per contract. You would just go to buy, and then you would click buy. This would come here. You would click confirm. It would charge you $160 for this contract, and you would hold the contract as long as you wanted to, till you get to the point where you've made money. That's how you do options on Webull. Peace.